China's been quietly accumulating gold for 2 decades. They've stockpiled over 2,000 tons, more than any nation on Earth. But gold isn't their real weapon. Their real strategy is far more sophisticated and far more dangerous to American power. While America sleeps, China has been executing a 20-year plan to destroy the dollar's reserve status, and they're using America's own financial weapons against them. Welcome to Money Stories, where we uncover the hidden histories of finance and the economic battles shaping our world today. Today, we're exploring how China is systematically dismantling American financial dominance through gold, currency manipulation, and a revolutionary new payment system that could reshape global commerce forever. For over 70 years, the US dollar has held an almost magical status in global finance. Every nation that wants to participate in international trade needs dollars. Every central bank holds dollars as reserves. Every major commodity, oil, metals, agricultural products is priced in dollars. This dominance didn't happen by accident. It was engineered after World War II when the US emerged as the world's dominant superpower. The dollar became the global reserve currency because the US military could enforce it. The US economy was the world's largest, and the US promised that dollars could be converted to gold. When the US abandoned that gold standard in 1971, the dollar should have collapsed. Instead, it strengthened because the US made a strategic deal with Saudi Arabia, price oil exclusively in dollars, and the US would guarantee military protection. This petrodollar system has been the foundation of American power for 50 years. Control of the world's reserve currency means the US can print money without limit, knowing foreigners will buy it. It means the US can impose sanctions on any nation by threatening to cut them off from dollar-denominated transactions. It means the US effectively extracts value from the entire world through centerage, the profit derived from printing money that others accept at face value. The petrodollar system has allowed the US to run massive budget deficits, fight expensive wars globally, and maintain an empire without the economic constraints that other nations face. China understands this perfectly. For decades, China has been subordinate to this system. China exports goods to the world and receives dollars in payment. China then has to hold those dollars in reserves or recycle them back into US Treasury bonds. This gives the US the ability to print dollars and have China effectively finance American deficits. China's leadership recognized this as a form of financial colonialism. They watched as the US used its dollar dominance to sanction Iran, Russia, and North Korea, cutting them off from international commerce. China understood that one day the US might do the same to them, and they decided they would never allow that to happen. China's strategy began in earnest around 2003, when China started systematically accumulating gold. Official figures claim China holds about 2,000 tons of gold. Independent analysts believe the real number is much higher, possibly 5,000 to 10,000 tons. China doesn't publish detailed gold reserves data, so the exact amount is unknown. But the pattern is clear. China has been accumulating gold at a rate far exceeding normal central bank operations. Gold purchases have been routed through multiple intermediaries to obscure the true buyer. Mining output has been restricted to keep gold supplies tight and prices high. The purpose is obvious. China is building a gold reserve, so large that it could theoretically back a new global currency. Simultaneously, China has been building economic relationships that bypass the dollar entirely. China created the Asian Infrastructure Investment Bank as an alternative to the World Bank. China created the new development bank with other BRICS nations Brazil, Russia, India, and South Africa as an alternative to the International Monetary Fund. These institutions don't require borrowers to use dollars. They facilitate lending and commerce using alternative currencies. But China's most revolutionary move has been the creation of the Petroyuan. In 2018, China launched oil futures contracts priced in yuan rather than dollars. For decades, anyone wanting to buy oil had to buy dollars first. This created constant demand for dollars and allowed the US to profit from currency conversion fees. The Petroyuan changes this. Now, oil producers can sell oil directly for yuan. They don't need to convert to dollars. They can hold yuan reserves instead. Over time, if enough oil producers switch to pricing in yuan, the demand for dollars could collapse. The Petroyuan has been gaining acceptance slowly but steadily. Russia, which has been sanctioned by the US and cut off from dollar transactions, has been forced to shift its oil sales toward China and use yuan instead of dollars. Iran, also sanctioned, has no choice but to trade in alternative currencies. Saudi Arabia, feeling threatened by Iran, has been exploring deals with China that include yuan-denominated oil contracts. The US has tried to maintain the petrodollar system through military pressure and diplomatic threats. But the forces pushing toward alternative currencies are powerful and growing. China has also been systematically reducing its holdings of US Treasury bonds. For years, China was the largest foreign holder of US government debt. But starting around 2013, China began liquidating treasuries, shifting wealth into gold and other assets. This reduces China's exposure to dollar depreciation and, more importantly, sends a signal to the world that China is losing confidence in the dollar. When the world's second-largest economy begins dumping U.S. debt, other nations take notice. Simultaneously, China has been building economic relationships that create alternatives to the dollar-based system. China's Belt and Road Initiative has extended loans to over 150 nations for infrastructure projects. These loans are denominated in yuan, not dollars. This creates demand for yuan outside China and builds relationships where nations prefer Chinese financial support to Western institutions. The effect is gradual but profound. Slowly, the world is building an alternative financial infrastructure that doesn't depend on the dollar. China has also invested heavily in digital currencies. China's central bank digital currency, the ECNY, is one of the most advanced digital currencies in the world. While the Federal Reserve has moved slowly on developing a digital dollar, China has been rapidly deploying digital yuan throughout its economy. The advantage of a digital currency is that it can be programmed. Transactions can be tracked and controlled. Capital controls can be implemented instantly. A digital yuan-based global payment system could give China unprecedented ability to monitor and control international commerce. The most sophisticated part of China's strategy has been the Shanghai Cooperation Organization and the development of alternative payment systems that don't rely on SWIFT, the US-controlled international payment system that has been the backbone of dollar dominance. China has developed alternative systems like CIPS, cross-border, interbank payment system, that allow payments in yuan without going through SWIFT. Russia has developed its own payment systems to circumvent SWIFT sanctions. These alternative systems are growing in capacity and adoption. The threat to dollar dominance is real but not imminent. The dollar remains the world's dominant reserve currency. No alternative currently has the liquidity, trust, or acceptance that the dollar possesses. But the trajectory is clear. China is building a parallel financial system that doesn't require the dollar. Over time, as more nations adopt yuan-denominated trade, as more central banks hold gold and yuan rather than dollars, as more commerce flows through alternative payment systems, the dollar's dominance will gradually erode. The implications are staggering. If the dollar loses its reserve currency status, the U.S. would lose the ability to run massive deficits financed by foreign purchases of treasury bonds. The U.S. would lose the ability to sanction nations through dollar denial. American military spending, which has exceeded defense budgets of all other nations combined, would become unsustainable. The American standard of living, which has been subsidized by dollar dominance, would decline. The transition would be economically catastrophic for the U.S. and disruptive globally. China isn't trying to create a Chinese-dominated world financial system. China is trying to create a multipolar system where no single currency dominates. This would eliminate the dollar's privilege but wouldn't make the yuan the dominant currency either. It would create a world where multiple currencies are used for international commerce, where no single nation can impose its will through financial domination, and where economic power is distributed more widely. The irony is that China is using the same techniques the U.S. pioneered. The U.S. built dollar dominance through military power, economic dominance, and the petrodollar system. China is building an alternative through strategic economic relationships, commodity backing, and alternative payment systems. China is applying the lessons of financial history and creating a system designed to survive whatever the future holds. The question for America is whether it will recognize the threat and adapt, or whether it will cling to a system that is gradually eroding. The dollar has been the world's reserve currency for 70 years, but that status isn't guaranteed to last forever. History shows that reserve currencies eventually lose their dominance as global power shifts. The British pound was once the world's dominant currency. Eventually it was replaced by the dollar. The dollar's dominance may eventually be replaced by something else. Perhaps a multipolar system where multiple currencies coexist. Perhaps by a new currency not yet invented. What's certain is that China has been thinking about this longer and more strategically than most American policymakers have appreciated. While American politicians debate short-term political issues, China executes long-term strategic plans designed to reshape global financial architecture. In 20 years, the world's payment systems may look fundamentally different from today. And if that happens, it won't be because China suddenly acted. It will be because China spent 2 decades systematically laying the groundwork for an alternative to American financial dominance. That's how China plans to sink the dollar, not with dramatic gestures, but with patient, strategic execution of a long-term plan. If you found this exploration of global financial power fascinating, subscribe to Money Stories for more uncovered truths about the economic battles shaping our future. Leave a comment below. Do you think the dollar will maintain its reserve status, or will alternatives eventually displace it? Thanks for watching Money Stories, and I'll see you in the next episode.